my friend. Good to see you as always. How are you?
Welcome to Zurich again.
Thank you.
I'm very good. Bearing in mind I'm getting older, like many of us, but I find that wherever I go, I'm the oldest, which is a new experience. But still, I can walk and I can talk.
Well, you
So.
continue to get older much slower than me. That's the tricky thing that I can't quite figure out. I need to know how you do that. So look, there's a few things I want to talk to you about, and what I love to do today is talk about. You've made this change from Matterhorn Asset Management to von Greyerz, and your name is now associated with the company, which I think is a terrific idea. So I want to really talk about how you came to this business. What was it that brought you into the asset management, the gold business particularly, because you started off in the corporate world in a very, very different world. And I think that story is something that's important for people to understand, that journey.
Yes, well, I started in banking in Switzerland a long time ago, just in the late 60s, actually. And I was born in Sweden. I was born with a Swiss and Swedish passport, but actually educated in Sweden. And then I had my first job in Switzerland. And then after that, I was offered a job in the UK for a retail company, electronic and electrical retailing called DIXONS. And we built up that company to a FTSE 100 company and a dominant company in the UK. And which was an exciting period because we had, take the early 70s, there was a 3-day week, no electricity.
Yeah, that's right.
And we sold televisions and hi-fi, etc. in candlelight without being able to turn them on. And this is when you learn to manage risk and manage the downside and never give in, never give in. So in spite of that setback for the country, DIXONS prospered, and as I said, eventually we became a FTSE 100 company. I was vice chairman at the time. I always was interested in managing risk, understanding the downside, so that DIXONS, for example, we were never exposed even in the worst of times. Our share price went from 130 when I got my first option, 130 pence, down to 9 pence in 74. That's a real fall, but the company was still financially strong and we recovered. So after about just under 20 years with DIXONS, which was a great learning period, I decided that I wanted to do my own thing. And I started my own investment activities in the 90s. I was always concerned about what was happening in the world with the debt situation and the derivatives. And I knew, because I've studied history a lot, I knew that every monetary era ends and every currency dies without fail. No currencies ever survived in its original form. So I knew that was going to happen this time also. Of course, you never know when. You only know that the risk is there. So I decided that the best way to preserve wealth is with gold. Gold is the only money that has survived, and gold has been around for 5,000 years, and it's nature's money, really. I remember you when you did that Real Vision piece on gold, the history of gold.
Yeah.
And you had the periodic table and all the elements. Maybe you tell that just briefly, because
it's just you go through those elements and you look at the characteristics that make for money, and there's really only one choice.
Yes.
There's really only one choice, and it does come down to that. It's as you said, nature's money is the perfect way to put it. It was almost as if it was conceived to be money.
Yes. Yeah. Now, so that's so fascinating. So you demonstrated that in a very clever way. And I obviously came to that conclusion also. So I knew that we were going to go into gold, but of course we'd had a period now since 1980, as you know, gold went from $35 in 1971 when the gold window was closed by Nixon, to 850 in 1980, and then he went down for 20 years to $250. So I was watching it, and I wanted to see that, and of course all the central banks were selling at the bottom. The UK, Canada, Norway, etc. Everybody sold out. It's the best sign ever, of course.
Yeah.
And so we decided then, when we thought the bottom was there and it was on the way up, we decided to go in and spend big amounts of money on gold. That's ourselves plus the people we were advising at the time. And that was 2002, so we bought gold at $300. And since then, we really never looked back. Of course, I have a son-in-law who's been with Morgan Stanley for over 20 years, and he was selling equities to institutions. And I always argue that the stock market is not going to survive, it's going to go down, etc. And he was making money and being successful all along. So equities were going up and gold was going up. Of course, we were both right. And although we had these crises in 2007-8, of course, and then we had the dot-com bust in 99. But nevertheless, so we continue. We weren't going to have a company first for outside investors, but then people around the world were asking us, and then I started talking to people like Jim Sinclair, Mr. Gold, and he was very, very much promoting us, but putting us on his website and saying that go to Egon. He put on his website once, and which meant that a lot of people came to us, and so we built up now what is probably the biggest company buying and storing gold for individuals outside the banking system, for high net worth individuals outside the banking system. And we have clients in 90 countries. And it's satisfying to actually be able to build a business built on a passion. And our passion is really to help people to preserve wealth.
Yeah.
And now, we've got a very good team of executives and you talked to some of them today. And that's now, when we started with gold 2002, or to buy gold, nobody owned gold.
Yeah,
everybody hated gold. It was oversold, undervalued, I thought. But since then, and it was already then, there was not much more than, there was around just a bit less than 0.5% of world financial assets in gold. And if you look today, it's still the same percentage. Nobody owns gold. Nobody understands gold. And as you know, the big change that I see is what the US, and therefore the EU, because they follow whatever the US tells them to follow, and confiscated the Russian gold. That meant that central banks understood that they could never keep the reserve assets in dollars.
Yeah.
And what we're seeing now, as I said, there hasn't been any major change in the percentage of gold ownership, but now we are seeing major forces buying gold and supporting gold. I think, I've said many times, central banks and governments are gold's best friend. Because they always, without fail, destroy the economy,
always,
and therefore the currency. And it's so easy. Why does nobody see that? Why does only 0.5% of world financial assets go into gold? It's almost inexplicable. I mean, you can go into that, and of course, governments do not want to promote gold.
No, absolutely not.
And because gold is really shows how badly they manage their economy. And therefore, except for China, that actually tells the people to buy gold, no Western state ever buys gold.
Let's go back to something. I want to talk about risk. You talked about your experience at DIXONS when the share price fell from 134 to 9 pence, right? And so there you are inside the company. You understand that the company is operating perfectly well. The company is operating fine. But the risk as it's perceived from outside the company is perceived very differently to the actual risk that you understand from inside. And so obviously that risk gets mispriced. The risk gets mispriced, the shares get sold at completely the wrong level.
Yeah.
But you have a much more complete knowledge than the people selling the shares. So let me ask you this in two parts. How do you deal with that, the knowledge of how the world really is from inside the company versus the perception of the world and the signals that the outside perception is sending to everybody? How do you manage that mentally? And how do you think about that today if you look at the gold price? If you look at your deep understanding of the gold market, supply and demand, the central bank component, the east-west component, and the price, how does that experience with DIXONS inform the way you think about gold and the gold price today?
It's an interesting question. Because first I have to say, I was a young man then.
Yeah, of course.
So when the share price went down by over 90%, it didn't make me very poor because I wasn't very rich to start off with.
Right.
I had shares, but it wasn't like it was a massive amount of shares. But as a management at DIXONS, we were incredibly strong management. That, as I said before, we never gave in. We just fought all the time, and so we knew that the company was in good shape. We didn't have. Sure, I was also responsible for speaking to the city and analysts, etc. But they weren't interested. We were a consumer electronic company, consumer durable, and they have what is called a high beta factor, which means that they shares react faster than the market as a whole when you talk about consumer electronics. So nobody cared about DIXONS as such because that was a sector that nobody wanted to be invested in. Just like gold today, as you say. I mean, I had another situation. I was invested with a friend that started an e-commerce company. At end of 99, I said to him, when it was valued at 10 times sales, no profits, of course, I said, we have to sell. But because again, I looked at the risk. This was such a wonderful opportunity, but the other way to what happens to DIXONS. But again, so that's risk on the other side. Holding overvalued shares, that could only go one way. And of course, we sold to a NASDAQ company based in Hong Kong. And we said the condition is that we can sell the shares straight away and not keep them.
Right.
And then, of course, the market crashed by 80%, as we know, at the NASDAQ, and many companies went bust, and we were out. So that's another side of the risk coin that, exaggerated situations, extreme situations in markets don't last. Whether it was DIXONS undervalued, the company was financially okay. It was balance sheet was all right.
But you knew that because you were on the inside.
Yeah.
The analysts covering the stock would have incomplete information. They do the best they could, but they didn't know because they weren't operating day to day like you were. So if we move that to the gold market today, there are a lot of people that look at gold for many, many reasons. Most of them just look at the price.
Yeah.
They don't look at the underlying, just as they did with DIXONS shares. They look at the price at 9p and go, well, this is a mess.
Yeah.
So talk a little bit about the gold market today, because we kind of closed in on $3,000, which was a number that people thought was impossible a couple of years ago. But talk about the actual state of the gold market and all the people that come to it and their first question is about the price.
Yeah.
let's forget the price. Let's talk about the dynamics of the gold market, the supply, the demand, the reasons for owning gold, and the common misperceptions amongst people who are new to the space.
Well, almost soon 25 years we've been into the gold market in a bigger way. We never worried about the price because, as I said, I had full confidence in that governments and central banks would always destroy the currency. And since we were in a phase now when debt was growing exponentially, I knew that we would see an acceleration, and therefore it was even less concerned about the gold price. Today there is 3,000 tons of gold produced every year, plus scrap gold. It's about the same. It doesn't change a lot now. There is no real increase in production to a couple of percent maximum a year. And world financial assets, as I said, are not going into gold. Therefore, we've had asset markets which have been growing so fast that they have not even looked at gold. But I come back to what I said before. The central banks are now moving into gold because they're swapping the dollar reserves for gold. It's going to happen over time. They're not going to do it quickly. Because they don't want to push the price up too high. But this is what now is supporting the gold price, what we're seeing now. It's not coming down. It's going up to new highs, not coming down. If you think about the 10 biggest companies in the US are valued at 17 trillion or 18 trillion, I think, dollars, the 10 biggest. The total gold in the world ever produced, that includes jewelry, bars, everything, is $17 trillion. And you see how ridiculous it is that a few companies are worth more than all the money ever produced in the world, all the real money, all the money that has survived. I think that's so fascinating. Central banks own about 3 trillion worth of gold, just a bit over 3 trillion. So that's like Microsoft. So all the central banks in the world own gold to the level of Microsoft, one company. So you can see it's out of sync totally. This is why central banks are going to switch into gold. And so are all the BRICS countries. For also the confiscation risk, as I said, because nobody wants to hold in their reserves, no central bank reserves in an asset that can be confiscated. So I'm seeing a major shift, paradigm shift, taking place over coming years in the gold market, with central banks going in, with as I said, BRICS countries going in, and of course, in the end, institutions will follow, like they always do. They're never leaders. They're never leaders. They don't understand the market. They just follow price. And in the end, of course, it'll be the retail market also. So there will be, in my view, a total revaluation of gold by multiples. Because there's a lot of money that is going into a very crowded market with very little supply. And very little stock that is available to sell. So the only way for these major buyers and forces moving into the gold market will be with a higher price, not because there is no more gold to produce. And that's why, as I said, gold will actually go up by multiples. And that's not sensational. It's just the obvious consequence of a market being revalued on a permanent basis. And I feel quite certain about that. Don't ask me about the timing. Two things I've learned. You asked me when you started Real Vision, you had a short interview and they said, tell me one of the things you've learned during your life. And I said, patience, I said. And I've learned to be patient. Things are, because I see things that are inevitably going to happen, they don't happen in the time period you think, because we are at the end of, as I see it, we are at the end of a major financial era now. I think this is going to end very badly. And whether that takes another 10 years or 5 years or 3 years, we don't know. and I've stopped forecasting time, and I've stopped forecasting price. I focus on direction and risk, and that stood me in good stead. So I think if you look at the gold market as an investment market, because that's how the majority of people look at it, we haven't started yet. And as I said, the price will move up constantly and strongly over many, many years now.
You talked about patience, and here we are 10 years later,
Yeah.
right? That was 10 years ago we had that conversation. And you talked about the gold price going up in multiples. And I think a lot of people do that. They fixate on the gold price, and the price going from 1,000 to 1,500 to 2,000 to 2,500 to 3,000, whatever it may be. But you and I both know that that's not really what's happening. It's not the gold price going up. This is really the purchasing power of fiat currency declining. So for people who are trying to understand gold beyond the terms of price, who are trying to understand why they need to own gold, not speculate in gold because the price is going up, help them understand the ways in which gold functions as a protector of purchasing power, as an inflation hedge, not purely about the price.
Yes, you're absolutely right, because when I say gold will go up by multiples, really we should turn it upside down, of course. So I'm back to where we started earlier, saying that no currency has ever survived. And just since 1971, every single currency in the world is down 97 to 99%, most of them 99. And the US dollar is getting closer to 100% every day. But still, it's going to fall another 100% from here also. Even if there's only 1% left, that's 100% from here.
But there are a lot of people that don't understand that, because they view the world through a fiat lens. Everything is priced in dollars, or it's priced in Swiss francs or euros or pounds or yen. And so it's very difficult to make this association. They don't see that the value of their money is going down. They see that the price of goods is going up. But of course, it is the opposite. So when you talk to people about the need to own gold, when you talk to people about why having gold is an important thing to own, not to buy, not to speculate in, but to own, explain what gold does when you have it in your portfolio, the function it performs by just sitting there.
Yeah. Well, we have the advantage of preaching to the converted, or let me say that it's only the converted that listen to us, really. So it's very hard to convince normal investors to buy gold. That paradigm shift hasn't taken place. You know, what I mentioned before about gold being pushed up and more going into gold, and people starting to worry more and more about the world economic situation or political situation. That's what's going to make them go into gold. But today, you know, let's just take an example so people understand it. If you take the value, the cost of a house today. So in whether it's in the UK or Switzerland, or in Switzerland has slower inflation, of course, or the US. So in 1920 in the US, and it's about the same in the UK, you bought a house for about 250 ounces of gold. So that was what, 20 times 250, it's $5,000. Today, you pay 250 ounces for a house in the US today, 250 ounces. But that's no longer $5,000. That's $650,000. And that's how you see, and nobody ever sees that because they think prices are going up, prices are going up. They're not. It's that, as you say, there's the value of their money which is going down.
Yeah.
And governments are very skillful in hiding that. But And nobody is interested today because asset markets have been pushed up, as you know, exponentially by the money printing we've seen. So no one ever thinks about wealth preservation.
Well, it's interesting because I have the numbers for you, so I can give you these numbers. In 2003, it would cost you, I think it was 64 ounces of gold to buy the median income US home.
Yeah.
Today, with the price of the home in dollar terms at all-time highs, in gold terms, it's 71% cheaper. So the price of a house in the US over the last 22 years has fallen 74% in gold terms. So for people trying to understand how this works, if someone comes to you and says, okay, Egon, I want you to buy me however much, $250,000 worth of gold in 2001, and you're going to store it for me. Today, if they want to exchange that gold for a house, they only need to take out 25% of that gold from the safety deposit box and exchange it for the house, and the rest can stay in the vault with you. And those are the kind of lessons that people need to understand. It's not the price. It's how many ounces of gold you have and what you can exchange them for that's so important.
Yes, and you know, that's the sad thing in the world today. Everybody measures everything with paper money, which is going down by the day. So you have a debasing currency, and you think your price is going up, but then when you look at your investments, you're just getting so much richer. You know, I had a chat with Jim Rogers a few weeks ago, and I said, you know, we should measure the value of things in chickens or cows, rather than measuring it in the currency, because it's something real, or a house for that.
Or barrels of oil or ounces of gold. Right?
Exactly. That will come, but before then, we will see a lot bigger decline of the currencies, and as I think we are starting the exponential phase now of debt going up. I'm absolutely convinced that interest rates are going much higher. I thought that for quite a while. Market is surprised that bonds are now going down, and bond rates, especially 10-year longer rates, are going up. To me, it was clear that interest rates bottomed in 2021 after a 40-year decline, and we are in for a long-term upturn in rates now. So that will mean higher inflation is coming, which means also, therefore, lower currencies. And I would not be surprised, which I've always thought, that we're getting to a point when there will be, you know, as Hemingway said, how you go bankrupt, first gradually and then suddenly. You know, I've taken the example a few times about how when you fill a stadium with water, 1 drop, 2 drops, 4 drops, etc. You know, and it only takes 50 minutes to fill a stadium with water by 1 drop at a time and doubling. But at 45 minutes, the pool is full at 50 minutes, but at 45 minutes, or the stadium is full at 50 minutes, but at 45 minutes, it's only 7% full. Mm-hmm. I think we are now getting into those last 5 minutes now, where we're going to see massive increase in money printing. And it might be in a different currency like CBDCs or so. They'll try to shift the focus away from the current currency. This is the new dollar, this is the new e-dollar or whatever. But that's what I see. So, you know, the protection now, and also what I said with the central banks and major buyers, BRICS countries, are getting into the gold market to protect against what I'm seeing, and they're saying, and what they are seeing clearly, which means that you know, now it is so important to protect your assets. Imagine if people in Venezuela around 2000, when the currency was the same as the dollar, the bolivar, same as the dollar, and now they've had hyperinflation, massive hyperinflation. You know, you look, I mean, you remember the Weimar, you don't remember, but you read about it, the Weimar Republic. You know, in 23, towards the end there, gold went from a few $100,000 to $1 trillion. That's the final stage of a hyperinflationary period, or an exponential move. I fear that we could get there. Of course, everybody thinks that we have the tools to stop it. We don't have the tools. If we had the tools, why has the debt gone up? What is it? The U.S. debt since Reagan has gone up 60 times or something like that. But tax has only gone up, revenue has only gone up 7 or 8 times. It doesn't add up, does it?
It doesn't add up.
No,
it doesn't add up.
And since now, whatever Trump is going to do, whatever Elon Musk is going to do, of course, the dream is that Elon Musk cuts 80% out of the U.S. budget now as budget chief now for the U.S. And that's probably what they're hoping he will do. But there will be, the people will there'll be a big revolution long before that, and riots before they cut expenses by that extent. So it's not going to happen. Debt will go up, interest rate will go up, inflation will go up, and gold, as it always has, will reflect the end of a monetary era, which we are getting into now, whether we have been in for a while, but we're getting into the acceleration phase of that.
Well, if we are where you suggest we are, and I suspect the evidence proves that you're right, then this is not a question of should people own gold. This is a question of gold is something people are going to need to own in order just to protect themselves from what's to come. And so I think what you're doing with von Greyerz is a great service to people that understand the risks, and it does give them the ability to hopefully protect their purchasing power. And none of us is going to be able to avoid all the pain that's coming. No, but at least you can mitigate it to a certain degree. So it's been great fun sitting and talking with you as always, Egon.
Thank you, Grant.
I hope we get to do it again soon.
Yeah, no, it's people. Gold is for freedom, as Emerson said, and security.
Yeah.
That's what it is. And it's not going to solve all the problems. I'll quote somebody else, Dickens, Nicholas Nickleby. He said for a while gold lost its luster because there were issues of the heart that were more important. And I think when it comes down to it, it's all about friends, family, and helping others. Gold is not going to solve all of those problems, but it certainly will be good to have as a support for your life, which could be a lot harder in coming years. Look at Venezuela, as I said. And therefore, own a little bit of gold. Can be a gram or an ounce of silver. But when the problems come, which they will, that will be worth its weight in gold, definitely.
Perfect. Thank you very much.